TheoTRADE chat. It's Don Kaufman here. It's April 3rd, 2024. Just about 3 minutes ago to the cash open here on this Wednesday morning. It's Wednesday. Let's take a quick glance at markets here as we typically do right before the bell. So the SPOOs are off again, some 15 handles. There's a hint of sell side activity in the air. I'll tell you, I wouldn't even worry right now. Just time out. You're looking at the marketplace, you're like, it's backing off again. No, it was trapped still last night on the lower edge of the expected move. We were talking about, how far off this expected move. We talked about that extensively, obviously, yesterday, and that is right in the zone. We were actually specifically talking about the 5204. It's basically where we closed. Look, we're right here. We're going to open on the lower edge of the expected move. The entire trading session, once again, will come down to exactly that line on your screen, that line being 5192. Now that's 5192 according to SPX. That's your trading day. Literally, that is your trading day. So we're going to open on the lower edge of the expected move, which has about 12 points of play around it. That's it. That's what you need to be concerned about coming into this cash open. You can look around and you're like, oh, okay, the financials are basically unchanged. And you look around and you're like, this Microsoft is down nominally. Like, there's not a lot of standouts on the screen right now in terms of sell side activity. There's just not. It's down, but it's really, really mild. Meta is actually still up. I cannot believe this. That one. It's not one of my favorites. If you haven't heard, Tesla's getting whacked back a little bit again, and Nvidia, a hint of sell side activity in the air, but whatever. It's only 10 points, on a $900 product. It means nothing. Energy sector, once again, has a bid. Advanced decline line, it's not what you think. Yes, there's a lot of declining stocks in here, but it's pretty nominal. Like, again, there's no fierce sell side. The only thing that has fierce size in it is, once again, the bond market. The bond market is rocking. Brought to you by the bond market. You have almost 190,000 contracts. That is huge by huge. It's not quite as big as yesterday at this point in the morning, but it's still huge by huge. So we're coming to this cash open here. I don't have a lot of preconceived notions, to be honest with you. What I mean by that is quite simply, look, you open on the lower edge of the expected move. The whole day comes down to not if we're going to rally, it's if we're going to break off. And I'll explain that when I say break off the lower edge. Break off the lower edge of the expected move, then things get crazy. Volatility is already quite bid this morning. Nevertheless, let's come to today's cash opening on somewhat negative ticks and a negative advanced decline line. Into the bell we go. See the advanced decline line? It's kind of negative. I'm surprised. We're back to this 50-50 slop-tastic marketplace. Oh, I like it. Anyway, with that, there's a little bit of a bid back onto the market. Again, I would not read into it at all right now. So, kind of keep that thought. I'm just answering a question over here on the side of the screen. Anyway, with that being said, as I was saying here a moment ago, just taking a quick glance at the SPX and where we presently are. Is that close enough for you? I'm just kind of zooming into this is first of all the daily chart, then we'll go to intraday, and the entire trading session. Once again, as I said, it's going to come down to that line. If you guys were not tuned in yesterday, as I said to you guys yesterday, the entire trading session, we're just probably going to skirt this line. It's exactly what we did. And people looked at this and they're like, oh, okay. Oh, we're gonna rally. Look, the bottom line is we had a little bit of a bid under us into yesterday's close, but you shouldn't read into it at all because it's right in that 12-point range. So let us discuss immediately, all right, what today's setup, okay, should look like. and what you should be aware of. Okay. The first thing that you want to look at here, there's no dip buying going on at all. Doesn't matter what you say. There's no dip buying going on until we would start to cross through right in this neighborhood here. Okay. That's absolutely, this is just noise that you're seeing on the screen right now. And I want to stress that to you. Still, you got to get above like 52. Again, that's like 52.04 to make it a little bit more interesting. Because right now we are literally trapped on that level. Okay. And it's a lower edge of the expected move. We're not trapped for the reasons like, oh, it's a level that's of importance. You're trapped because hedging activity will keep driving you back there. If we're going to start to break into a rally, a real rally, you're going to know it. We're going to cross through, and this could happen. And again, from a probability point of view, the highest probability is being inside this expected move. Technically, we're inside it right now. We're kind of trapped on it, but getting above 52.04, okay, is right in that 12-point range. Remember, this was 51.92, okay, about 12 points higher, somewhere in this neighborhood of 52.04. If we start getting to 52.04 on SPX, you can go look right here in the S&Ps and you'll see big volume spikes. Those volume spikes would be indicative of us starting to break to the upside. We ain't there. You could come right to 52.04. Oh, it gets interesting. It means absolutely nothing at this point. Nothing. It doesn't mean anything, right? It'll only mean something if you get above here and you would see this big spike higher. You would see volume really pick up. Obviously, there's no volume in the SPX, but there is volume inside of the S&Ps. Nevertheless, that is what is critical at this point. Okay, that's to the upside. And again, you don't want to discount the ability to rally out of this. I would say this, there's a lot of Fed speak and a lot of crap going on this morning with bonds down like this. I think you have to be a little bit concerned. Even if we start to rally up, you got to be concerned we're going to roll back over because those bonds are, they're vicious at this point. Okay, so I'd be a little careful with that logic. Now, again, a rally is absolutely permissible in the marketplace, but though I think the bonds would have to rally a little bit too to the downside in the marketplace. Let's talk about the dark side of the force. The dark side of the force, the exact same thing is relative. Be about 12 points. We already talked about it yesterday. Okay, the 51.80, yada yada yada. Okay, that's it. That's what your trading session is. For right now, okay, we're trapped on the 51.92. You got to break above about 12 points higher or 12 points lower, and we'll see. Okay. Everything else that you see in here, it doesn't, like, people can come screaming that it's dip buying. It's all noise. Okay. You have a huge rally right now inside of Meta. Is that going to be able to sustain anything? Not by itself, it's not, because every ounce of that rally in Meta is being offset by some sell side here in Microsoft. Everything else, though, it's relatively flat. Amazon's flat, Apple's flat. Okay. Even Tesla, it's mild sell side, but Nvidia definitely makes a difference over here. It was down $10 at the open. It's down about $4 right now. Tend to be a little bit of a wild child in this tape. Moreover, you have the financials a little bit bid in the energy sector. I mean, this marketplace, it's flat through and through. The only reason it's leaning a little bit to the downside is you have a handful of tech stocks that are indecisive, to say the least. But Nvidia looks like it's ripping to the upside right now. So the advanced decline line, does that do it for you? Okay. No, I'm feeling indecisive. Intel's actually taken quite the hit this morning. Apparently, they have some cost problems. Okay. I found actually their statements interesting today. We can go into that maybe a little bit later, but that is your setup. CC was asking me, how do you get plus or minus 12? You drink a lot of coffee. No. We were talking about that yesterday. So the plus or minus 12, okay, is relative to volatility. By the way, we're really close right now. So it's relative to volatility. The higher the volatility, okay, the more degrees that the product can actually move away from what's expected. When you're thinking about a marketplace that is, and by the way, here's where you want to start to look for volume spikes. We're right there right now. Okay. So this volume would have to pick up, and you'd want to see between 6 and maybe 8,000 contracts trade. This might be it. Okay. We're right on the level of interest right now, 5204. When you're on that 5204, that's when I'll switch back over here. I'll come back to that 12-point discussion in a moment. That's when you want to switch back over to here and look for some big, very big volume spikes. You can see that the volume already picked up in the previous minute. Right here, it picked up. It should stick out though like a sore thumb. Otherwise, we're just gonna, again, this is definitely the point of interest right here. So we'll call it 52, 54, but we're not broken off of it until we actually see some decent size actually trade through. And that 12 points, I'll come back to that for just a second. Okay, the 12 points, without question, is a very good estimate. Okay, it is not definitive. It definitely takes a feel. If this volatility were at 20, it might be like 15 points. Okay, it is dynamic based on volatility. All we know, okay, is that servers are constantly driving you back here. It's because there's tremendous amount of hedging activity that drives markets every single day. People, and there's this doing this and this doing this. It's all for nothing. Okay, it's hedging activity that drives intraday trade. People put positions on. Those positions have to have risk reduced by dealers. Dealers being market makers. As the dealers are actually reducing risk, it's batting the market around like a toy. No one gives a damn. Everybody comes up with reasons. The S&Ps are doing this. The S&Ps are doing this because Taiwan Semiconductor. It doesn't look, that has no bearing whatsoever. Okay. There's no question that products that are mega market caps, massive market caps, are definitely and unequivocally, okay, moving markets around. But it's the hedging activity in something like NVIDIA that is also batting around this marketplace like it's a toy. So there are times where you look at market moves, you're like, that doesn't make sense in terms of like what you think it would, and it shouldn't. The market very often will move the opposite way of what you would have anticipated. I'm trying to break down the lingo a little bit. And the reason it'll move the opposing way is because dealer gamma is always usually on the other side, okay, which makes many of the moves the opposite of what you would anticipate. But when it comes to hedging activity, it's what moves the markets, okay, on a day-to-day basis. Look at that. We're right on that 204. It's crazy. Like, again, we're just toying with this level right now, okay? It could. The breakout volume, though, didn't happen. So we're somewhere right in this neighborhood here becomes critical. And yet, okay, as we start to rally up, maybe things slowed down a little bit. We'll see. We'd have to see big spikes in volume. We should be seeing that right now. So we estimate it's about 12 points. But if the VIX, okay, if VIX was higher, and I'm just using VIX as like the end all be all for volatility, which it's not, but if VIX were higher, that range where we're packed into the expected move, that range would definitely widen a little bit. And that's very, very important. Okay. So just be mindful of just that. Again, I know people were talking about the earthquake, which is wow, some of the video I was watching last night. Okay. But there's one thing, like if you're looking at it and you're talking about pricing in markets, I want to bring something up of how efficient a marketplace really is. Okay. This is Taiwan Semiconductor, which I read the news last night. I read the news this morning. The stock is unimpeded. Stock's exactly where the rest of the marketplace is. It's a non-event for the underlying because even if they are shutting something, you're done. It doesn't make a difference, right? Okay, you're done already. Like, don't have to worry about it. All the conjecture around it caused the stock okay, to sell off a little bit, it was immediately bought back up. Okay. That's how efficient markets are. And I think you should trust, right here, I think you should trust the marketplace. Could they be wrong? Sure. Trust that marketplace because the marketplace is going to know a lot better. It's going to have information disseminated, okay, from tens of millions of traders. And that information is instantaneously disseminated in a price action. There's a bid back under here. It's a non-event. Okay. It literally is a non-event. And we probably sit there thinking like, oh, this company could be in a real mess. It could be trouble. It doesn't impact the underlying, right? It doesn't impact actually, for those of you who don't know this, they're building, most of their new plants, not going to be in Taiwan. They're going to be in like Chandler, Arizona. I drove out there not too long ago. I had to go down to Chandler. It's insane. It's just acres and acres and acres, okay, of these, warehouse looking, it looks like a Costco, like imagine a Costco, just a regular warehouse looking building that goes for miles. And it's insane, like how big between it and Intel that's down there and 4 other firms, crazy. There's also a lot of server farms they're building out there. Just what need more servers. Okay. Hopefully it's not with NVIDIA chips. Okay. Short NVIDIA. All right. Continuing over there. So there's a lot of things that go on in the marketplace where you gotta, separate what you think and look at some of the price action, make yourself and force yourself to be a little bit more of a purist. And that is, price matters and what you think doesn't. You can think like, I'm so bearish in Google. Okay. I'm so bearish. And then that's okay. You can come up with 20 different reasons, but your bearish in Google doesn't have anything to do with today. Your bearish in Google would have to do with out here somewhere in the future, preferably not gambling on earnings. But that's out here. Okay. Today, that is the price, whether you like it or not. And you can be all kinds of bared up. And you can come up with the reasons where like, hey, maybe Google sells off today. I'm just using Google as an example. Google gets pulled down with the rest of the marketplace. And that's fine. Daryl, why so much in the Chandler area? It's because power is cheap. They have everything down there. From the power is cheap relative to where it is in a lot of other places. There's a lot of incentives to move down there, there's tax incentives and so forth. And then all the executives, it's easy commutes to like Scottsdale and so forth. But yeah, it's comes down to cheap power. I knew even Charles Schwab had a lot of servers for a long time in the Chandler and Tempe area. It's good stuff. Okay. Yeah, water's not a problem. Okay. There's still talk of like them building a pipeline all the way from like the Gulf of California up. Suck the salt water. Okay. Some kind of gross water too, but whatever does it for you. So as we were saying, obviously we've hit this critical level in here. What's interesting is I'm surprised that the S&Ps, whatever, they were down a little bit, but I'm surprised they've come back with bonds. Bonds are at lows right now. Like this is literally the low tick in bonds. So we're right at that point where we should break out to the upside. There's the volume right there. Here comes volume. So we are right now starting to really rally. This is the kind of volume spike that you look for us breaking off that expected move. Okay. And you can see it's right in the area that we talked about. So, and again, as I said to you, why the 12 points? I'm like, well, it's a damn good estimate. It's never going to be perfect. Okay. And we're so close to trying to get off. Like you can almost feel us like, oh, I can't move off this level. And there's still, unless we like take off, there's still that high probability you come right back into it. Like the whole day comes down to that freaking level right there and our ability to break above or below it. And you can almost feel like we're stuck because we are. That's exactly what it should feel like. Speaking of what it should feel like, let's go take a quick glance at NVIDIA. So one thing I want to, again, make comment on that I've been talking about now, oh, this would be about the seventh or eighth trading session. Volume, okay, has been absolutely, okay, and brutally anemic. Last night in the overall options marketplace, we did 41 million contracts. Okay. So, and again, where am I going with this whole volume thing? Whatever, okay, was driving the marketplace higher, gone. Now we know one thing for sure. What was driving the marketplace, okay, was option flow, meaning that option flow is the reason that we continue to go higher, day after day after day. Okay. The driving force behind that is always an unknown, meaning like, why are they doing it? Probably the dispersion trade and so forth. But I cannot stress this enough that the volume in the options marketplace, it hasn't just dissipated, it's evaporated. So we were averaging about 48 million contracts. I'm just going to write this up because it's really important. We were averaging coming into like 2 weeks ago about 48 million contracts a day. Right now, like yesterday, we did 41 million. Okay. Now you're looking at like, whatever, man, it's only 7 million short. That's a lot. It's a lot because yesterday it had a move. Like we moved yesterday. SPOOs were down over 1% at one point in the day. Now I know that nothing ended up happening yesterday. I got it. Like, look, yesterday we went down and most of the down move, okay, that's the bell right there. The bell didn't go off to here. So the whole damn day we were just, and we're still there. It's like not all that exciting in here, still trapped too. So it's not all that exciting, but I can't stress enough that there is no energy to the trade right now at all, right? There's no energy to the trade. It doesn't matter whether you're bullish or bearish right now. There's no energy to the trade. So if the market starts to rally again, and we looked at volume and why I'm covering this, let's say today, and just bear with me and time out. Let's say today the marketplace rallied. And if the marketplace rallied today, okay, and took off by 20 points, like literally finished the day 20 points higher, would it matter? And the answer is only if volumes like took back off. If volume got back up to like 50 million contracts, I'd pay attention. But the energy behind trade has completely dissipated. Now, there's a lot of like, technical studies that talk about, it's fractal energy. It has nothing to do with this. Okay. This is, I am very, very much like a purist about what in the hell do you look at? Okay. Because what you look at, and again, I'm not opposed to like, Jeff Bierman looking for like the MACD rolling over. You look at it like a linear regression. It's cool. It's giving you a feel for price action. Okay. I'm looking for confirmation to the price action in literal terms. If you don't have dollars behind it, it means nobody gives a damn about the move, period. Right. So when you get moves like, we rally, let's say the S&P's finished today up 20 points, but the volume is 37 million, option contracts. There's no umph behind it. We basically drifted listlessly higher. No one cared. Okay. The same thing is true though of yesterday. Yesterday, you see some sell side activity. Guess what? In sell side activity, volume should spike. It didn't spike. It's the exact opposite. Volume was still well under the norm. And I'm not talking about S&P volume. S&P volume, like, look, it moved. The option volume, okay, got us from here to here. If we're going to see sell side, volume's going to rip. If we're going to see more buy side, the only way to get there is volume on the option marketplace has got to rip. And it's anything but. Okay? And the confirmation won't come to like the end. But look, on a day-to-day basis, I'll just tell you, I can tell what the volume is going to be because you only have to really go look at the SPX and go, what's going on in the SPX, man? Okay, that number is wrong. The sizzle is 600. Thanks, Chuck. Okay, they have chucked up the platform a bit. Anyway, you got that going for you. Sorry about that. I was just reading over here. Was TheoTRADE based out of Scottsdale? Okay. Trade's gone, man. It's over. It's TD Ameritrade now. And the TD Ameritrade was Chuck. But Chuck is actually, well, actually, a lot of Charles Schwab was here too. That was servers, though, and so forth. Okay. Charles Schwab is kind of out of Texas. They all moved to Texas. Actually, yeah, it really is. Most of the offices are in Texas. They kind of abandoned ship. They had offices in San Francisco. And even a buddy of mine that worked in the San Francisco office, he doesn't report into that office anymore. He still lives a little bit inland, but he still lives in California. That's a shame. But so he lives in California, pays California prices, and now works for a Texas-based company. How's that working for you? Okay. All right. Continuing on. We do have some data points coming out this morning. Okay. Are they all concerned? ISM is coming out, and then we have, Federal Reserve. Okay. He's going to speak. Yeah, whatever. Like, by the way, there's no less than like 6 or 7 Fed speakers today. Fed speaks. Okay. Fed speaks. So there is a ample Fed speak today. I don't put a lot of weight into it. Look, I think the marketplace is telling you a lot already. I mean, if the Fed says something spectacular, then sure, what the hell, the market's going to move. But what are they going to say? Yada, yada, yada. We got nothing left to say. We are very data dependent. Okay. I mean, I thought to myself, no one could be more dry than Ben Bernanke. But I was surprised. Then they found Janet Yellen, and I was like, holy crap, she really was more dry than Ben Bernanke. I mean, Ben Bernanke was like a piece of 3-week-old toast when he spoke. He very rarely did press conferences, but then they brought up Janet Yellen because she was good in front of the camera. So then you had Yellen, and then they, out of the depths of boredom, okay, and where they actually assembled Jerome Powell, I don't know, okay, but it's impressive how boring that crap is and how little is actually said. It's amazing that he can actually speak for 20 to 30 minutes about absolutely nothing. So you got that going for you. Anyway, by the way, yeah, so Jerome Powell, I'm like taking a nap over here. Jerome Powell is speaking today. But again, I personally don't anticipate anything. I mean, what the hell is he going to say? Okay. I mean, the only thing I think he could say is, we're data dependent. Data has been relatively strong. Okay. Which is, what? I think the market's already pricing it in. If you don't believe that, just look at the the bonds. The bonds in the last 3 days, they're seeing some tankage. Tankage. So bond tankage, volumes up in there, yada yada yada. Okay. See if we actually broke. Boy, this is one very strange. We saw the big volume spike and nothing really after. That was actually news that caused that volume spike. This is the volume spike of interest. Okay. But we're still just grinding right now, just grinding. Obviously, okay. I wasn't really considering that ISM is going to be a market mover, but it's very obvious now that it's going to shake us. So you got to be a little careful in 4 minutes because ISM is going to shake us either above or either it's going to shake us up, okay, or it's going to pull us right back down to the edge of the expected move. There's just no in between. It's going to be the it's going to be a factor. Look at the volumes coming up right now too. So look, volume in S&P is, as I said, it's all about hedging activity. The only time you see big volume in the S&Ps is when firms, their deltas start to move a little bit. Firm-wide delta is mitigated, okay, via algorithms. When Jeff Bierman talks about, algorithms, they're defending, okay, like defense. You're like holding up signs, so forth for like defense in the audience there. Doesn't really work that way, okay. As a trader at a firm, you sit there and you might be trading, okay, but there's an algorithm that is mitigating directional bias, especially when it comes to like dealer gamma, because most of the firms like Citadel and Virtue and most of those big firms used to have algos that are actually hedging off all the directional risk. Okay. And it's not, market making is probably right now the least exciting business you could ever be in because you're making a fraction of a penny trying to do it millions of times a day. Okay. And yes, there's been a million movies where like people tried to steal fractions of a penny and so forth. What did it start with? Was that like Superman 2 or 3? Remember Lex Luthor stealing like pennies? Okay. I can't remember which one that was. I think it was Superman 2. Uh, my blood pressure is low, man. It's really, really low. I have to like hook an air compressor to myself every day. Yeah. Anyway, with that, sorry, I was commenting on there. Check the blood pressure. Okay. I'm not alive. Not alive. So Office Space did it too. That's where I was going. No, they did it in Superman first. All right. Superman was first. Office Space was like, Office Space was definitely the funniest. Okay. The pennies for the jar for the children. Sorry. That's, by the way, you're not gonna stump me on Office Space, please. That's like one of my favorites over there. Okay, of offbeat cult movies, unequivocally Office Space. I mean, that's it really is one of my favorites. I have to watch that one. Okay. Superman with Richard Pryor. Holy crap, that is you're going back in the day there. It was, I think, the Superman with Richard Pryor. I forgot about that. Maybe I tried to forget about that. Is anybody in that movie still alive? That's even crazier to think about. All right, continuing on. Okay, Brian Aponte says it's Superman 3, and Brian Aponte, idiot savant for that stuff. Okay, I'm going with Aponte. Aponte for the win. Brian's gonna know this. Here we go. We're about to see some news come out here, and then I promise I'm actually going to talk about trading and not Superman 3. Okay, but this is what's important, people, to know which Superman they were stealing pennies from. Okay. Um, so as we come into this, you're going to see volume completely disappear. That's because nobody wants to take any risk right before this. Like all the size disappears right before any announcement. Normally, again, I don't feel like I would ever care about an ISM number, but you're getting the ISM number like only a few hours before Jerome Powell and everybody else in the Fed speaks. And there's just no other primary driver to the marketplace right now. So I'm cracking up over here. Okay. Um, here we go. So S&Ps, that's exactly what I said. It's going to shake us loose, and shake us loose it has. ISM manufacturing is out, and it looks to be a very critical market mover in here. My, what large volume you have. Okay. That is hedging kind of 101. So we knew the volume would dissipate and then explode in here. Okay. Whole marketplace waited for it. Again, normally I wouldn't care at all about that ISM number, but look at the size coming through in this minute. So it's not okay. Anything that we haven't seen before. By the way, the Nasdaq is the rip. Okay. The Nasdaq is really the rip over here. The Nasdaq was just trading at 70 and just shot to 30. So it's a 60 handle move inside of the Nasdaq in just mere seconds, and it's going to continue right now. I would look for continuation over here simply because all of a sudden the dynamic moved up. Hedging activity is going to drive us. Now you noticed thus far this morning, I'm not running out to do any intraday trades. Okay. And I'm not running out to do any intraday trades right now, neither bullish nor bearish. Okay. Because that price action is literally a coin flip. I mean, price action here, it's been a coin flip. We didn't know what the ISM was going to do, other than we knew it was going to shake us higher or lower. off of that lower edge of the expected move. So we are off right now. By the way, if you're curious, again, as I say, I'm a little bit of a purist. I stopped looking at a lot of this stuff. If you're curious, ISM, okay, maybe that's a little bit weak. Okay, that one, employment, no one cares about. Anyway, the new orders they care about. This number is a little bit weak. And this one, the business activity is like a little bit stronger, but it looks like a little bit of a weaker ISM is driving a rally. So bad is so good. Okay, bad is so very good in this marketplace. And bad news is kind of what you got out of the ISM. So we have a bit of a rally. Speaking of a rally, here's NVIDIA. It's got a bid back under it. Again, the Nasdaq continues to rip, and we're off to the races. As I said to you, like if the S&Ps were up 20 points, whatever. Depends though on the end of the day to see if that option volume comes back. Can't stress enough. There's no size really trading right now, other than probably in Meta. Meta is going to see some size over here. There's some call buyers. Even that though, it's just light. It's light and fluffy in here. Like if you take a look at Microsoft, which is still down on the day, Microsoft, there's no size trading. I mean, look at this, 29,000 option contracts, 30 minutes into the trading session is nothing. Back over to some positions, okay? Let's go over to Boeing for a second. So Boeing, even though we've seen some sell side activity to the broader marketplace, okay, Boeing has just dribbled a little bit lower. But in our Boeing trade, to say that we're on the dance floor is an understatement. Okay, we're right where we need to be. I mean, if Boeing just progresses a little bit lower, we're home. If it rallies up, don't worry, you got 16 days. I mean, you're just going to have to kind of take the Boeing trade, day by day. The one thing I'd like to do in the Boeing trade, though, okay, and the reason that I am bringing it to our attention is take a quick glance at the Boeing trade. By the way, there's a number of different Boeing positions I put on over time. But if you take a look at the Boeing trade, where did I send this one out? $1.16, $1.17 in that neighborhood there. Okay. I'll actually go take a specific look at this. Right. But anyway, I'm looking at the text message in here. And the reason I'm looking at the text message, because we're going to go and we're going to price exactly where we need to get out of this. The Boeing trade was sent out exactly at $1.17. So if the Boeing trade was sent out at $1.17, let's get up our trusted calculator. You take $1.17, okay, you multiply it by 1.55 equals, okay, a buck, let's say 81, $1.81. Can we agree we're rounding the 3 to a 0? Is that okay? Okay. Is that okay? I want to make sure that everybody that has a master's degree in engineering, okay, from a Canadian university is on board with this one. So it's going to be $1.81 would be the exit price. Sorry, even that cracked me up. It's going to be again at $1.81. So when I set this up, and I just want to show you when I set it up, see I have 3 contracts. No. Do one contract. Okay, do one contract, and I'm going to set this one right to $1.81. I'm going to set it to $1.81. Okay, that is going to be my limit price. And I'm going to change from day, and I'm going to go GTC. The order is set up exactly, precisely the same way inside of Tasty. And you hit confirm and send. We're GTCing it and send it. Okay, and then in your, on Tasty, it would actually be. It would be right here under activity. You can see all your working orders, filled orders. You can see everything in here. You can see, by the way, this is another trade that I did on Boeing yesterday. It's part of a catapult. Anyway, now I've got an order that I'm working GTC. Now I know at any point I can see where we're marking. Mark is current mid price. So mark is mid price. When I say mark is mid price, I mean that the mark, when I say the mark is the mid price. People don't understand the mid price. That's the current price of the spread, right? It's the current mid price of the spread. And then this is my limit order. So we're about 50 cents, 50, 60 cents away from greatness in here, right? It's again, that's good. The marketplace right now continues a little bit higher. There's absolutely no surprise in here. What is a little interesting though is it's some of the financials maybe that are the driver. Okay, those have already backed off a little bit. NVIDIA kind of caught fire the last couple of moments. Okay, just be aware that the Nasdaq is kind of lagging on a percentage basis right now. So the Nasdaq better take off to the upside, or this little rally could be over. Right? You're also going to have to contend once again with Jerome Powell, who says "naughty monkey." It's just so interesting in a marketplace where, okay, yeah, we had bad news. I love bad news. Okay, bad news causes markets to rally. People, you got to understand something. We're so screwed up and so twisted around for so many years with such cheap, money, and everybody's so infatuated with interest rates that bad things happen and good things happen in the marketplace. And you start thinking about this and the logic of it, you're starting to root for bad news if you're bullish. Think about that for a second. You're like, God, I hope that ISM just sucks. I can't wait for retail sales to suck so bad that we rally. Okay. That's how screwed up we really are. Yeah, that's where we are. If you want to know if some people don't have any feelings about this, but if you understand, like Jeff Bierman absolutely despises the Fed, these are the reasons why. Okay, I actually don't necessarily despise the Fed, other than compare them to 3-week old dry toast. Janet Yellen. It's Punxsutawney Phil. Okay, she is the stunt double for Punxsutawney Phil. She sees her own shadow. Okay, and it's 6 more weeks of winter. All right, continuing on over here. Nobody even listens to the damn groundhog anymore. Okay, that used to be a real thing. Now not so much. So I'm looking at the marketplace right now, and we're up 10. And I ask myself, what's the driver? What is the driver? Energy. Energy is not even really, but in line with the S&Ps. It's the financials. The financials right now are a big driver, and tech. Tech isn't hurting, but it's not actually helping. So it's a very, very flimsy little rally that you're seeing right now. And again, if you will, I'm just going to state this. I don't think this is a rally much at all. I think it's a little bit of noise in the marketplace right now. We're not gripping hold like I thought we would in the rally. And you can say, well, we moved from 42.45 to 42.70. That's a 30-point move to the upside. Yeah, I would agree with that. I can see the price action. Nevertheless, when I say it's like a flimsy rally, you realize you're up now, but volatility, okay, even though it got crushed, volatility is actually amping back up. It's not, okay, this is not the kind of rally that you're looking for. There's nothing behind it. There's nothing to keep it rolling. Every rally that we've seen over the last 4 to 5 months has been perpetuated exclusively, okay, by derivatives, option contracts. It's just not there. It's not there. Do you see it in here? Okay, there's no squeeze, other than maybe I was looking at Meta, and I see that Meta's up day in and day out, but I keep looking down here at Meta. Whatever, there's a couple of calls trading above, traded at the ask or above. There's a few of them, but this is crap. There's nothing trading in here. Okay, this is the crappiest looking rally I've ever seen. So right now, right, you have the threat of getting pulled right back to where we started. Okay, it is what it is. I wouldn't have a lot of preconceived notions about directional bias for today, because I think you're going to get your head taken off. You can get all the kinds of bullish you want. Allergies are kicking in over here. Bear with me. Bear with me. There could be a gigantic sneeze coming. All right, I'm holding it together. Anyway, I don't have a lot of preconceived notions about today's price action. I think that some of that will change. The Fed speak, it's another catalyst, but again, I don't expect a lot out of them. Without that options volume though behind us, okay, drifting listlessly in the night. All right, a couple of other stocks I wanted to talk about. So let's jump to Intel. Okay, Intel. A lot of discussion at Intel about cost-cutting measures. Typically, when you talk about cost-cutting measures, the stock would rally, right? Everybody aware of that? We'll fire some people. It'll be great. Remember, okay, bad news is really good for a stock. And in this case, they're cost-cutting measures. But if you actually read into it a little bit, or the marketplace does listen to this stuff, the cost-cutting measures All right. We're not until like between now and 2030. Okay. Like literally, they were going to institute cost cutting measures between now and 2030. And they might even break even on some of their like real foundation type products. Yeah, that sounds really bullish. Anyway, they're facing a lot of headwinds in the marketplace regarding expenses. Intel is basically down. Bottom line, right? Year to date, Intel now is off about 14%. And normally I don't look so detailed at Intel, okay, because it's not even $200 billion company, okay. But on a percentage basis, this one kind of matters today. It's about a 7% move. It's big boy move. Big boy move. So yeah, at least their CFO is probably more exciting to listen to than Jerome Powell or Janet Yellen. All right, we got that going for us. Okay. Think Janet Yellen's gonna hang it up here in the next year or so. Okay. She is getting up there in the years. Okay. We're not supposed to talk about her age. Okay. Could not talk about the groundhog's age. Okay. The groundhog thing, what has it been around for? Like 300, 400 years? It's been a long time. Punxsutawney Phil is going to outlive all of us. Okay. Continuing on. I know I'm wandering a little bit. So Intel, the other one, ADP report came out this morning. The ADP report, I mentioned this briefly, but okay, I'll make a bit more mention. ADP is the kind of private payrolls. The number was good and it caused the marketplace to go down. So remember, Intel's cost cutting measures caused the market, caused Intel to go down. A bad ISM caused the marketplace to go up, but good payrolls causes the marketplace to go down. You got all that? Because it's good stuff. It's craptastic out there right now. What do you want from me? Okay, so ADP, portends maybe that the payrolls number end of this week. If you guys are unfamiliar with that, we are going to see the employment situation later this week. Employment situation is going to come out obviously Friday morning. Yada yada yada. The last couple of employment situations have been really good, which has been less than good for markets. This one is a little bit of a toss up. One thing, though, that is important to know, ADP has not been, okay, a good precursor to what the employment situation is going to be. Categorically speaking, it's not even in the same ballpark. So just because ADP was good means absolutely nothing for the employment situation is what I wanted to get. There's no like the correlations between them, like they suck. They're absolutely terrible, Anyway, with that, some more news coming out today. No, again, it's just Fed speak. That's really all you have. The petroleum status report. I don't think the U.S. petroleum status report makes any difference. Oil is definitely worth discussing for just a brief moment. Okay, oil has been on a tear. Okay, my opinion right now, oil can continue to rip. So keep your head in the game if you are involved in oil. Anybody here trading any oil? Okay, I caution. I would not attempt to short a marketplace like this right now. I don't care even if you think it's going to go down. I think the geopolitical risks, okay, are just on the edge out there right now. The geopolitical risk is on the edge, and this is a marketplace that could absolutely explode. You see S&Ps are highs right now. So this is a marketplace that can just rip. I mean, you can be trading $100 a barrel oil tomorrow. So just be aware of it. There's a lot of pent up aggression in that marketplace. And, don't take my word for it. Look at the volume has picked up in there. But moreover, for those of you that don't necessarily track volatility is decent. It's not like amped too high, but here's another way to look at it. Okay, it's not amped too high. We've seen volatility a lot higher in here. Okay, but I'd be very concerned on the short side of oil. Okay, being long oil, even if it does back off a little bit, I think oil is actually going to have a bid in the $80 range now for quite a considerable period of time. So keep your head in the game in terms of oil contracts. Today, SPX is about a $25 move expected today, and that's it. So when I say as $25 expected move, here we are. Okay, we started a day. Just bring this into a scope here. Let's zoom it in. Okay, we started the day basically right here. Here we are. All right, so a little bit of a rally back. As we always say, the highest probability is inside the expected move. Okay, anything's plausible. We could pull right back to the lower edge of the expected move. I mean, that right there, okay, and being on that lower edge of the expected move, that's the dance floor, people. That's going to be the dance floor. In my opinion, I can't help but think this. I know that you're seeing a rally right now, okay, and here's the opinion piece from me, okay. My opinion, I don't want to bear up on you, okay, but I'm going to tell you there's only been one breach to the downside of expected move this entire year, right? I think that the marketplace is incredibly tired. In my opinion, that's why the volume and options is so freaking low. Okay. I believe that between today, tomorrow, and Friday, again, literally between today, which is right here, tomorrow and Friday, we're going to dance once again with the lower edge of the expected move. And we very well could close outside of it. Purely my opinion, okay? And a lot of that opinion is based on there's still quite a bit of news to come out. Because I said there's some Fed speak that could, I don't think the Fed speak shakes us up. I think the employment situation can definitely shake us up a little bit. There's still quite a bit of volatility packed into the remainder of this week. Obviously, the week ends here on April 5th. You have $51 of expected move still packed in there. So it doesn't matter what you think, look at the expected move, right? There's a lot of action, a lot of price action priced in. So I think once again, we're going to dance on the edge of that expected move. Could be later today, could be tomorrow, but almost unequivocally, I think we go back to it at least by Friday morning and have a chance to break apart. The marketplace, as I said, it's exhausted. The volumes are down. Okay, the rally has, well, look here. Over the last 2 weeks, we have not progressed at all to the upside. There's just nothing going on right now. It's not to say, I don't want to diminish the ability for us to rip again, because we absolutely can, right? But for right now, I believe that you have to actually resolve a little bit lower to get some energy back to the marketplace. That energy being, a little bit of trust in terms of like price action. None of this stuff is pulled back. Like there's no pullbacks in here. Like, yeah, okay, Tesla, it's pulled back a little bit. It's been pulling back, but you look at stuff like Microsoft, there's been really no pullback. Okay. Apple, obviously, Apple's been taking a beating all year long. Amazon, it's all-time high. Amazon sitting at an all-time high. Google, okay. Google, it had its pullback, it's all-time high. Okay. Meta, literally, basically sitting at highs. Nvidia, okay, cooled off, but this thing hasn't really pulled back. One of the problems you've got is how do you continue, to go higher when there's no entry point to any of these. Okay, it makes sense to actually see some sell side hit the marketplace, and that's not necessarily when I say that it makes sense to see some sell side hit the marketplace. I'm not actually saying that to be like bearish. I'm saying that because if you're bullish, you don't get that pullback. I don't think you have an opportunity to find good entry points to anything right now. So be aware of it. By the way, crypto, a little bit of a recovery, specifically today after yesterday. It took a beating yesterday between 6 and 7%. Volatility is basically flat today. So volatility is interesting today because the S&Ps are up, the Nasdaq is up, volatility is still slightly higher. That just goes to say that what you're seeing right now, this might not be the main event. Basically, what it's saying is volatility is still higher, meaning that the S&Ps are up 14, but nobody trusts this marketplace as far as you can throw it. I think that that's a good way to take a look at it. Right? Ticks scattered and broken. They're worthless right now. I mean, they're positive, but they've been scattered and broken throughout the course of the day. The advanced decline line, okay, means absolutely nothing. It's sloptastic. NVIDIA is back to 900 on the button. NVIDIA's volatility is gone. Okay, totally dissipated. In fact, and speaking of volatility, when I say NVIDIA's volatility is gone, okay, it really came off. Now, time out. Lower implied volatility on NVIDIA could once again cause people to want to come in and buy calls and rage the the stock a little bit higher. But as I said, there's no fever pitch to that marketplace. Okay, if there's a place that I am incredibly bearish, it's got to be financials. Can't stress this enough. So yesterday I did an intraday trade, okay, in JP Morgan. And I'm actually going to come in here and go to JP Morgan. Okay, let's just go back Go back 2 days just to make a quick point here. Let's go back 2 days. And JP Morgan, all right, I bought the 200 puts for 247. I closed them for 260. Okay. Now, is that a win or a loss? Nope. Okay. That's a scratch. That's a scratch. After commissions, after the work I put in, that's a scratch. Now, on Monday, we had a pretty good QQQ trade, right? So on Monday, we had this pretty good QQQ trade. On Tuesday, I kind of scratched in JP Morgan. One of the things, though, I'll tell you about trading, okay, when you're wrong and you don't lose money, that's huge. When you're wrong, because this is a pure directional bet. When you're wrong and you don't lose money, it's a very good thing, because if you take a look at JP Morgan of where we entered yesterday, I think our entry was actually pretty decent pricing. It was when we were up here. We faded, but so nominally. Like, one of the things I'm telling you right now, okay, if there's a place that I'm bearish, holy crap, it's got to be JP Morgan. Got to be JP Morgan. Like, look at the move here. I just can't stress this enough. Like, if you're looking for opportunity, that thing is up basically 50% from low to high. It's a $60 move. Okay, look, we were trading here at about what? 135. We're trading now basically at 200. Just bear with me for a second. So you have a 65-point move, right? 65-point move. Do you see anywhere on the screen? Is the expected move 65 out here? That's 2 years out. It's almost 2 years out. Okay. The movement that we've seen, and I was talking about this last week, the movement we've seen in markets right now, okay, from this rally in 5 months, okay, has been greater than you should see in over 2 years. So in 5 months, we moved like we should in basically 24 months. It's just an insane, okay. And again, I don't want to get into the context of this is a bubble. This is not a bubble. Price action, okay, tells you everything you need to know. The marketplace, okay, and by the way, this expected move is based, that expected move right there at 57 is based on a $200 product. You do realize that if you went back, and again, to give you an effective expected move, come back over here to think back. Come on, there it is. Come back in here into just November 1st. I just want to show you November 1st. It's $138. Call it $140 stock. Look all the way out. 800 days of movement was less than 50 bucks. Okay. Yet what? 100, 150 days later, okay, we're $60 higher. That kind of price action it's unfounded. It's just, again, we're in the never, never land right now. It's one of the most important things to understand that you can see on your screen, because I'm not here to preach to you, all right, about overbought, oversold. Okay. I'm not here to preach to you about a bubble. Okay. Doesn't matter. I mean, there's signs of a bubble, in some of the tech stocks, but whatever. I am here to tell you, though, that kind of move is statistically, okay, very, very significant, because if you looked 150 days out, movement, and again, we're back now, November 1st, movement was supposed to be 17 bucks. Did we move 17 bucks? No, we basically moved 60. I mean, you're moving 3 or 4 sigmas. I mean, it's basically, $17. This is a $65 move, right? $65 move, just to give you an idea. So you're expecting we actual move is 65. You were expecting a $17 move. Okay. What do you got? It's almost a 4 sigma move. I mean, that's some wild stuff. Okay. Some really wild stuff. And that's not the only product that's obviously doing it. I can look at, the energy sector moved from 80 to 96. It's not nearly as significant, right? But it is, because this is a product that was supposed to be moving what? Like $11? It's supposed to move $11. Okay. Instead, you got almost what? $16. That's big, but it's nowhere near like what the financials have done. Okay. That to me is one of the most bearish areas, because it's an entire sector on that. The JP Morgan specifically, though, is the object of my affection in here. Okay. Apologize. I may have cut out for just a second. Bear with me. Interesting. It's weird. My camera cut out. All right. So with that, I'm okay to go. All right. So Brian was actually asking me here. Oh, sorry about that. It's so weird that my camera got strange in there. Oh, because another host came in. I see it. Okay. I saw you. All right. With that, yeah, you know what? The kind of trade that I would look for in here, okay? Kind of trade I would look for in here. No doubt so I'm short. I'm just short like 1,000 shares of this. The kind of trade I would look for in here, I'd go like 79 days out. This is actually a fairly inexpensive way to do it. And come in here and use and fairly deep in the money put. You want to usually look for like an 85 delta. The bid offer spread in here is a little bit wider, but this is about as close to as it gets. And you can actually get what we term synthetically short by buying an in the money put. By buying an in the money put, you're basically synthetically short. Synthetically short means you're short without actually having to short the marketplace. Okay, that's important. So you're short without having to be short that marketplace, which is a good thing. The market in here being 225, 230. Okay, you can actually come in here. You don't have to necessarily pay 230. You can come in here and go into penny increments, okay, and fire that position off, no problem. Kind of middle of the market, but that's a great, what I would call duration short position. Now, just because I'm saying it, does it mean that the marketplace has got to back off? No, it does not mean the marketplace has got to back off. Okay, what it does in fact mean, okay, what it does mean is that quite simply, okay, you have a position on that it's only going to cost you a max of what, $2.30 if you paid the marketplace right now, to where I think it gives you an incredibly viable risk reward, incredibly viable. And if the position goes against you, you can re-up or roll it out. There's a lot of variations of what you can do in that position. Now, again, this has been a less than stellar, open, because yes, the marketplace took off a little to the upside. There's absolutely no surprise. The real trade activity started right in this neighborhood here, which was the ISM number, sparked us off, okay, the lower edge of the expected move. As I said to you, at least from my perspective, look, we can continue to rally today, maybe even reverse. If there's going to be a trade opportunity for me on an intraday basis, and I'm telling you right now, I like intraday this week. We're seeing good two-sided trade. Okay, look at the week right now. We're seeing good two-sided trade. There's some back and forth. The week actually started right in this neighborhood here. We're seeing decent price action. There's some back and forth movement. Even if we rally a little bit further today, okay, have no fear. Jerome Powell and crew will screw that one up. Get some two-sided trade. Volatility sees something coming. Keep in mind also, there's about a $25 expected move. We're still inside of that for today. I am going to turn it over to the professor. Jeff Bierman is coming on here momentarily. And he has got a session. It's called Inside Out, the signaling power of inside versus outside days, part 2. Again, as I said, like a little bit less than this is not exactly heart pumping action in the marketplace. Don't be surprised for us to pull back a little bit. There's definitely some fears, a little bit of nerves regarding Jerome Powell. I don't think there's anything behind it, but the bond market isn't exactly helping today as the bond market starts to back off. I'll look for trade opportunities. I don't want to force anything in a marketplace that is uneasy. We need to see that option volume kind of return before I start getting some decent price action that we kind of sink our teeth into. Stay tuned. Jeff Bierman will be on here in just 2 minutes.